Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 7th, 5:08 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through day last week on November 1st and 2nd. First by the NASDAQ 100 on Wednesday the 1st, then a second by the NASDAQ 100 on Thursday the 2nd, and also the S&P 500. Really all indexes had follow-through days on that day, and that really jump-started this recent rally. You can check the trend gauge over here, market leadership, green arrow there. Short term, all five of the major indexes are above their 21-day moving average, green arrow there. Mixed bag versus the 50-day moving average. We've got the big cap indexes above, small and mid below. Same thing with the long-term 200-day moving average. So what happened today? Continued bullish action, both by the indexes and by the leaders. Not everything finished positive from the indexes, but the pullbacks are controlled, uh, and dips seem to be being bought, and leaders are acting well. Leading stocks are the best indication of a healthy market, and we're seeing fantastic action there. Here are the final numbers. The big seven up 1.13% today. RG8, this is our 8 growth ETF composite, up 0.48%, led by ARK-K, up 2.87% today. S&P 500 up 0.28%, really led by technology, not necessarily the big eight, although they did contribute. But you can see the RSP equal weighted was negative today, down 0.21%. Tech, the clear leader today. NASDAQ 100 up 0.95%. Equal weighted NASDAQ, also a good day, up 0.81%. Software had a good day, and semis leading to a nice gain by the equal weighted. And again, that is more evidence that it's not just the big seven tech, but it was really a tech-led broad rally today. Dow up 0.17, mid caps and small caps down slightly, about 0.3%. Global 60/40 up 0.13%. Global stocks, foreign stocks in particular, VXUS, that's the foreign index, down 0.6%. Bonds, however, pulled this value up today as the broad bond index up about 0.5%. So net up 0.13%. In-house GROTECTION up 0.60%. Leaders acting well, and a gain from our index long on SPXL. We'll hit the tail of the tape in an expanded 21/21. Let's get right into it. We'll start off with the S&P 500, and you can see we're not giving up these two gaps, holding the 50-day moving average, and with a tightening range and an upside bias. Let's take a look at a 5-minute chart here. One thing to note is that this 43.85 level was touched 4 times today, so that's a pretty clear resistance level, at least as of right now. And if we back off to the 60-minute chart, you can see this 43.85-ish area was resistance over here back in the beginning of October, including the false breakout that we had here on 10/17 that led to the most recent third leg down, which we're now in the process of recovering, and ran right into that 43.85, 43.86 level today. We get up to 4,200, we can fill this gap from 920, 4201 and change to be exact. So running into some resistance here, wouldn't be surprised to see continued consolidation. When we go to the tail of the tape, you can see on the day count, we've now had either 3 or 4 days, depending on the indexes, and no distribution on those days. So that is a good sign as far as the rally continuing to be successful. We don't want to see distribution on any of the 5 days immediately after a follow-through day. Let's head on over to the NASDAQ 100, continuing to lead, making higher highs into some resistance from a few weeks ago around this 373, 74-ish area. Look at all the days up here. We've got 3, 4, 5, 6, 7, 8 days up now. First one closing at the bottom of the range. So that gets a little bit of an asterisk, but very clearly the leading index, as you can see, 2 weeks of relative strength, showing their relative strength at a new high ahead of where the RS line was back at the end of August and also on in July. And it's doing that before price is getting there. That's a bullish sign. Let's go to the Dow Jones Industrial Average. Consolidating tightly right above this 34,000 level, so some good stuff there. Let's go to mid caps, MDY. Ran into the declining 50-day moving average, making two lower lows, almost filled this gap. High 444.47, low today 444.96. This 21-day moving average, the green line now, that has hooked up. We should expect a bounce off that if this rally is going to continue. In fact, that would make a pretty nice entry point there. IWM, same situation, second day on a pullback. This 21-day moving average hooking up. And remember this 170 level, that was a big support area back in December, back in March, in May, before we finally undercut it as 2 weeks down of this last three leg down. We reclaimed that level with the big gap up on Friday. We're pulling back into that level now again. With the 21 approaching there, that 170 level would be a good low risk entry. If we're going to expect this rally to continue, we're going to have to get some cooperation from MDY and IWM, certainly. Let's go over to the VIX. VIX making a lower low relative to this most recent recovery in the market with the follow through day, now below this 15 level. Good stuff there. Let's go to the dollar. Dollar rejected at the declining 21-day moving average, but up on the day. Over to the precious metal group. GLD bounced off the 21, down 0.41%. SLV, silver down 1.7%, making a lower low through all this consolidation. Not good action there. GDX, the gold stock index down 1.92, undercut but reclaimed the 50-day moving average today. Let's flip the bonds now. Bond price up means rates are pulling back. This is actually a new closing high from this recovery on the broad bond index, up 0.5% today. TLT, the long bond, closing high, also not a new high. We made a higher high last Friday, and we're coming into this declining 50-day moving average again, but up 1.47%. That means you're going to see the 30-year pulling back, down 2% today, still holding this uptrending 50-day moving average. The declining 21 and the rising 50, one of those is going to have to give. TNX, the 10-year, down 1.95%, sitting right on the 50-day moving average. And the Bitcoin futures BITO ETF trying to make a breakout today. We added to our position on this, up 2.43%, breaking above with some volume above this double bottom consolidation here. All right, let's go to the tail of the tape. Making its reappearance after 2 days of travel on my part and 2 abbreviated sessions, but let's dive right into this. You can pause it. I'm going to hit the highlights. Really, the biggest news to me is what are stocks doing, and no distribution since the follow-through days is the positive sign there. 3 days or 4 days, depending on which index you're talking about. 5 closes above the 8 EMA on the S&P, 4 on the 21-day. Tight range action, leadership working, all good stuff today. Portfolio changes. We sold PDBC oil with a gap down, as well as all oil stocks. Those look like they're done for the time being. We bought ARK and Celsius. We added to our CCJ and BITO, as I mentioned. We've got a couple of other gaps that we're going to take a look at, raising our exposure from 1.07 to 1.25. And the bottom line, continued tight bullish action, leaders acting great. So we're going to go, first of all, to ARK. ARK is one of the best ways to participate if growth stocks are rallying. You can see reclaiming the 21, the 50, and the 200-day moving average now. And if you can handle the volatility, we can. If we keep our size small, we've got a 4% size on it. And we'll be using, probably measuring it against this 40 level. Wouldn't be surprised to see a pullback, but decent low risk entry point here for that after 2 days of consolidation. So let's go now to the 2121 list, but I actually have 31 names on here. That many stocks are acting well, didn't narrow it down. Plus, not as much time with my family commitments over the last couple of days. But let's go through here. If there's a red flag on here, that means we own it. CrowdStrike, we got a 6% position in this, making new highs. Gold, one of the weaker ones today, but bouncing at the 21-day moving average. Netflix, our largest position, continues to act great. CCJ took it up to a 6% position today. I mentioned on last night's video that the 60-minute stochastic was set up. We got that cross and the undercut and reclaim of not only the 8, but a bounce off the 21. When all bunch of things converge like that, and you undercut and reclaim also the 40 level, which is key there, it's a good entry point, and we took that up to a 6% position. Great fundamentals on CCJ too. Bitto, I mentioned breaking out. We took that up to a 3% size today. Eli Lilly hanging right around that 600 level. Microsoft continues to make higher highs. Deckers, nice day today, up another 2.65%. Amazon making higher highs. Meta, uh, not quite higher highs, but continuing to show relative strength on this move up after the gap down on earnings. Nvidia, putting in a nice double bottom base here. Celsius, not the best close. Numbers fantastic. Good low risk entry off this 21. It rallied into earnings. You can see how crazy things were at the open today with its earnings. It came down and found support down here around this 168-ish area. Started to bounce later in the day. With it holding the 21. It actually was right above the 50-day when we bought it, pulled back the last 30 minutes, but good low risk entry here with the lows of today, and the fundamentals are absolutely fantastic. BRBR, this begins the ones that we don't own, but this continues to act great. I'm just going to page through these very quickly. CEG, nice day up before its earnings report, pullback on its earnings report, down 3.9% today. Abercrombie running away to new highs. NVO, the other weight loss drug, surviving the day down, the move down the day after earnings. FRO, lone oil stock left on here. Actually, I've got another one too, but it bounced at the 21 today. A lot of oil stocks looking a lot worse, including this one. FTI looks like it closed barely below the 21 today. Pinterest consolidating nicely after its earnings gap up. Same thing with ANET. XPO. VRT, kind of low risk entry here after its earnings shakeout. AMD continues to rocket higher after its nice reaction to earnings. Nutanix trying to regain its leadership status. Uber with a nice shakeout on earnings, relative strength higher high, very high on our list for a buy. DraftKings also third day up after its earnings and a breakout from the flat base. DoorDash consolidating nicely after its earnings move up. Palantir, same thing. Ferrari, same thing, gap up and 3 higher highs since then. GoDaddy, nobody talks about this, but that's a heck of a nice bar on its earnings report, and it's been consolidating if you look at the weekly chart, you can see how long this consolidation is. It goes all the way back really to 2020. If this breaks clear, this could really go, and some great fundamentals here with the earnings growth. And finally, Datadog, big move up, hasn't broke to higher highs, but huge volume, 689% up, 28%. Gain today above the 100 level, also high on our list, and that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, email my partner Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Don't have to say it's how much you make in the market, it's how much you can keep, but that's always our mantra as we are in bull one now, early bull market. We expect inline or minor outperformance with our beta being above 1 now. Hopefully, this will morph into a stronger bull market. We can get to bull 2 or bull 3, where we've proven throughout history we can outperform. After a tough week last week with underperformance, as we shook out below the 200-day moving average, and then on Wednesday, just the hint of dovishness from Jerome Powell, the market took off like a rocket, and we've been adding exposure ever since. So this is how we expect to perform over market conditions. We're not a pie chart. We vary greatly depending on what the overall market's doing, but that's because of our active management style. And with that, I'm going to wrap up the daily video report for today, Tuesday, November 7th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.